The beginning of the 2020s has truly been a rocky start to a new decade. Starting off with a global pandemic that sent the entire world into lockdown at the same time, then came the relentless rise of inflation slowly eating away at everyone's buying power and making everyday life much more expensive. There's also the escalation of new global conflicts on a scale that we haven't seen in generations, alongside the rise of AI. These are truly incredible times we live in. Not to mention all of the attempts at creating disruptions to how we use technology today. However, not every bold bet succeeds. In fact, most of them fail. And today we're going to take a look at a prime example of what happens when high-flying ambitions crashes back to earth. It's a story of a person who wanted to make it easy for everyday people to invest in the future. That person is Cathie Wood. And in this video, we're going to trace the exact moments that Wood went from being hailed as the next Warren Buffett to being branded the biggest destroyer of wealth Wall Street had ever seen. Before we take a look at what made Wood famous, we first need to take a look at Wood herself. Born in 1955 in Los Angeles, California, Catherine Wood had a relatively conventional upbringing and would eventually attend the University of California, graduating in 1981 with a degree in finance and economics. One of the more interesting aspects of her time there was that she was studying under the economist Arthur Laffer, a prominent financial advisor to both Ronald Reagan and Donald Trump. Laffer became Wood's mentor, and it was this crucial relationship that helped her secure her first industry role in 1977 as an assistant economist at Capital Group, which is a massive investment management giant who manages billions of dollars. Over the years, Wood would climb the corporate ladder, eventually landing her the role of chief investment officer at the asset management firm AllianceBernstein in 2001, where she oversaw a $5 billion portfolio. Having witnessed their devastating crash of the dot-com bubble, Wood made an interesting observation. While everyday investors were understandably fleeing single stocks in favor of ETFs, she noticed that private technology companies were still seeing their valuations multiply despite their damaged reputations. Driven by a lifelong fascination with science and technology, she began aggressively adding these types of hypergrowth stocks to her portfolio. And for a time, this strategy seemed to work perfectly. Wood's portfolio would beat the broader market year after year, generating massive returns for AllianceBernstein. But despite her financial success, upper management grew increasingly anxious about her aggressive investment strategy. A quote from her old boss, Lisa Shallett, perfectly summarizes the skepticism that would later define Catherine's career. Quote, "Her biggest blind spot is managing risk and volatility." End quote. And this assessment would be entirely accurate because during Wood's tenure, her fund experienced massive volatility, which is standard territory when dealing with small cap, highly speculative tech stocks. And in the shadow of the dot-com bubble, management's hesitation was entirely logical. But as long as the broader economy avoided a major crisis that would threaten market liquidity, everything remained stable. But then 2008 came. When the global financial crisis struck, the capital flowing through Wall Street instantly dried up. Institutional money was immediately pulled out of small cap stocks, which were suddenly viewed as far too dangerous and unpredictable. As a result, Wood's winning streak came to a sudden halt and the portfolio crashed completely, massively underperforming the S&P 500. As the fund bled clients who rushed to withdraw their capital, executive leadership stepped in. They pressured Wood into buying stable index funds to secure the portfolio's overall performance. And while this stabilization effort worked, it severely restricted her signature investment style. Eventually, it became clear that she could no longer operate under these corporate constraints. And in 2014, she parted ways with AllianceBernstein to launch her own investment management company called ARK Invest. Named after the Ark of the Covenant due to Wood's devout Christian faith, the title was deeply symbolic. According to the Bible, the Ark of the Covenant preserved the most precious artifacts in existence, a fitting metaphor for the high-value disruptive assets that Wood intended to accumulate. Her core mission with ARK Invest was to pioneer actively managed ETFs that the market had never seen before. While the majority of ETFs at the time bought predictable indexes or safe sectors, no one had such an aggressive investment model like the one Wood was envisioning. Backed by an unshakable conviction that she frequently described as divine inspiration, she set out to create a brand new type of publicly traded ETFs. Most notable amongst these ETFs was her flagship ARK Innovation ETF, a concentrated bet on small-cap tech disruptors, with its most famous holding being Tesla. This specific stock would later define the very history of ARK Invest, but in those early days, the firm was facing an uphill battle just trying to secure enough capital to launch a single ETF. By 2016, 2 years after the firm's initial launch, Wood has seen virtually no traction for her vision and was beginning to wonder if she had made a massive miscalculation. Without any real capital flowing in, it was becoming impossible to scale her planned ETFs onto the global stage and realize her dream of making ARK Invest a success. However, just as self-doubt began to creep in, she was suddenly thrown a lifeline from an unexpected source. Bill Huang was the manager of the controversial hedge fund Archegos Capital, a man who I'll probably make a video on. But for this specific story, his role was the savior who stepped in to make Wood's ambitions a reality. Huang, who is a devout Christian himself, saw Wood as someone he could partner with to not only elevate her platform, but also expand his own wealth, and provided the capital required to launch ARK Invest's first 4 ETFs. While that massive capital injection restored Wood's confidence, a fundamental hurdle still remained. Even though her investment strategy and target sectors were distinct, she still needed a way to cut through the noise if she wanted to capture the attention of Wall Street's institutional giants. To do this, she did something no one had done before. She began openly publishing her firm's research, laying out the reasoning behind every stock pick that she purchased. This move was unheard of since most funds guard their data like state secrets, either to protect their unique competitive advantage or simply to maintain an aura of exclusive financial genius. For Wood, however, the strategy was built entirely around absolute transparency. Yet, despite standing out with this open source approach, by 2018 her funds were still relatively unknown. However, it wouldn't take long before she would make a bold declaration that would launch her straight into the financial mainstream. On August 22, 2018, Wood published an open letter on the ARK Investment website claiming that Tesla stock could skyrocket to as high as $4,000 per share by 2023. This crazy price target sent shockwaves through the financial markets. The timing of her statement was critical as Elon Musk was actively discussing taking Tesla private. Wood argued fiercely against that, calling it a tragedy because it would rob everyday retail investors of the company's massive upside potential. To say Wall Street was stunned by her price target would be a massive understatement. At that exact moment, Tesla was going through production hell, brutally struggling to roll out its vehicles, and critics were openly wondering if the automaker would face bankruptcy. Trading at around $321 a share at the time, Tesla's valuation was already ridiculed by skeptics who pointed out that it wasn't nearly as profitable as legacy car manufacturers. Even the most optimistic bulls on Wall Street set their targets at around $700. Therefore, predicting a $4,000 stock price within 5 years left the public understandably skeptical of Wood's competence as a portfolio manager. However, the gamble achieved its true purpose. It thrust her directly into the media spotlight. Wood remained utterly convinced that she was right, and while the financial world fiercely debated whether she was a visionary or completely delusional, the argument would soon be cut short, because the entire planet was about to experience a completely different kind of shock, and the stock market was about to enter one of the most chaotic bull runs in recent history. In 2019, the first initial reports of coronavirus began emerging from China, and rapidly it spread across the globe. By March 2020, it had officially escalated into a global pandemic, forcing widespread shutdowns. The financial markets felt the consequences of this, with the S&P 500 plummeting nearly 25% in a matter of days. To combat this sudden economic shift, the US government began printing unprecedented amounts of money, flooding the system with emergency relief loans and stimulus checks. This sudden influx of liquidity left everyday citizens in an interesting situation. They suddenly possessed an excess amount of cash but had nowhere to spend it. And thus Wall Street experienced a new colossal wave of fresh retail investors eager to put their money into the market. And for Wood, she also felt the benefit of this because by the end of 2020, Wood's ARK Innovation ETF had delivered a staggering 170% return in a single year. Pinpointing the exact reason for this rise is difficult, as her success was fueled by a perfect storm of circumstance. First, a new generation of new investors began their investment journey during an aggressive bull run where practically everything moved upward, fostering an extreme tolerance for risk. Second was the explosive rise of speculative SPACs that were going public at an alarming rate. These entities are essentially mergers that were created as a way for small companies to bypass the strict regulatory requirements of traditional IPOs. And as mentioned, these companies began sprouting everywhere, with innovative and speculative tech that promised to reshape the future. They pitched everything from disruptive digital banking and hydrogen energy to online gambling, rare earth mining, but the most popular type of SPACs were the ones focusing on electric vehicles. Startups talking about commercial electric fleets, electric trucks, and consumer cars captured the public's attention. This sudden obsession with the transportation of tomorrow created immense momentum for Tesla, and it skyrocketed its share price and turning Cathie Wood's seemingly delusional $4,000 price target into reality, more than 2 years ahead of schedule. Considering Tesla traded around $321 when she first made her call, the stock had surged an unbelievable 1,100% in just over 3 years. The hysteria surrounding her flawless prediction fundamentally transformed her public image. Overnight, the media crowned her the next Warren Buffett, the ultimate star investor of the 21st century. This endless publicity paired with ARK's heavy concentration into Tesla created a powerful feedback loop, as word spread around about a fund who focused on small-cap disruptive companies managed by the new Oracle of California. Mainstream capital as well as institutional wealth poured in. Wood began appearing everywhere as every major financial media outlet wanted to cover her story. However, unfortunately, 2020 would mark the peak of the ARK Innovation ETF. And from here on out, it would only go one way, and that was down. Way, way down. Through 2021, the fund faced an incredible volatile year. For market participants who bought in at the absolute peak expecting a repeat performance, the reality check was brutal. The ARK Innovation ETF stagnated and eventually dropped roughly 22% from its all-time high, mainly due to overall market volatility. What many failed to realize was that the early 2020s boom relied entirely on rock-bottom interest rates, cheap debt that allowed corporations to borrow aggressively and dump capital into new technology. This capital was essential for keeping these unprofitable startups afloat, and that fragile foundation was about to be completely shattered. In 2022, the Federal Reserve aggressively hiked interest rates and thus borrowing costs to combat inflation. The easy money that previously fueled these startup growth stories had instantly dried up, and the ARK Innovation ETF was hit hard. Its main stock positions such as Tesla, Roku, and Coinbase saw their valuations being slashed. Being the victim of a market correction and a mass exodus of panicking capital, the ETF's price plummeted 65% in a single year. The narrative surrounding Wood shifted drastically. The supposed female Warren Buffett was now branded as one of the greatest wealth destroyers in modern history, with a flagship fund vaporizing $7.2 billion of investor money in just a couple of years. Even after the crash of 22, Wood stubbornly doubled down on her core thesis, maintaining her strategy of backing small speculative tech ventures. The issue, however, was that almost none of her bets had paid off, leading to a streak of investing into companies who would eventually go bankrupt. However, one of her more infamous trades during this time was that she completely liquidated her position in Nvidia in early 2023, right before the AI boom triggered one of the greatest stock rallies in human history. This catastrophic track record during such a short period of time has led many to question whether Wood was running an outright scam. Now, personally, I don't believe that she is a scammer. I mean, nobody forced people to buy into her vision. And much of the anger, I believe, simply stems from individuals who got heavily burned because they didn't understand the high-risk nature of the assets that they were purchasing. However, I would actually question whether or not she qualifies as an investor, because the strategy of pumping capital solely into unprofitable, hyper-volatile entities is something that very few would actually call investing, and looks a lot more like pure speculation and something that you would find on the WSB page. In the end, Cathie Wood possessed an investment strategy that could only thrive during a highly speculative, low interest rate environment. She was simply at the right time at the right place, with a beautiful, compelling story to go with it. It's just a tragedy how terribly it all came crashing down in the end. So how is ARK Invest doing today, and more specifically, the ARK Innovation ETF? Well, following its catastrophic crash, the fund has been on a slow grinding uptick. However, it remains nowhere near its pandemic-era all-time highs. And when you factor in the sheer volume of capital that it has eroded over time, the long-term track record remains fundamentally flawed. To make matters worse, the fund carries a hefty 0.75% management fee, an expensive premium when compared to other ETFs that is incredibly difficult to justify given its continuous underperformance. It is honestly sad to watch such a compelling concept being executed so poorly. An ETF focusing on buying small, innovative disruptors with the potential to reshape society sounds flawless on paper. In practice, however, translating that vision into a profitable venture is incredibly difficult, especially since the success rate for these unprofitable startups is incredibly small. Lately, Wood has made occasional headlines for adjusting her asset allocation, but these minor trades is nothing in comparison to the former hype she used to generate in the past. Ultimately, it's hard to view ARK Invest as anything more than a collection of underperforming, actively traded ETFs standing together with the thousands and thousands of other products open to investors on the public market. I find it kind of ironic that you have all of these Wall Street veterans, we're talking people who've been in the market for years and who have gathered all this knowledge and experience, and every single time they tell people that if you want to make money, you shouldn't try to beat the market because over the long term it is practically impossible. And yet you have these amateur investors try anyway. And the same goes for high-profile fund managers who try even harder. Cathie Wood's saga serves as a reminder that no matter how brilliant, experienced, or deeply knowledgeable you think you are about a sector, the market can and will humble you. Thank you so much for watching. Please leave a like if you enjoyed the video and subscribe if you want to see more. This has been another tale from Wall Street, and I'll see you in the next one.